Hi, welcome to Solution in YouTube channel. In this video we will learn about the accounting equation. We will cover the basic accounting equation and extended accounting equation with examples. The basic accounting equation is a fundamental part of the balance sheet and one of the basic principles of financial accounting. The balance sheet is one of the three fundamental statements, alongside the income statement and the cash flow statement. The balance sheet shows the company's total assets and how the assets are financed. It may also be called the statement of net worth or a statement of financial position. The accounting equation formula is assets equals liabilities plus shareholders' equity. This equation is the foundation of double entry accounting. Double entry accounting is a method of accounting that means each transaction affects both sides of the accounting equation. For every change there is in an asset account, there has to be an equal change to a related liability or shareholder equity account. It's important to keep the accounting equation in mind when taking care of journal entries. The balance sheet is made of three sections and their underlying items, assets, liabilities, and shareholders' equity. Total assets are made up of current assets plus non-current assets. Total liabilities are made up of current liabilities plus non-current liabilities. Total shareholders' equity is made up of share capital and retained earnings. Let's see some examples of items in each section. Assets may include the following. Accounts receivable. This represents a business's credit sales that haven't been fully paid by its customers. In simpler terms, it is earned revenue that has not been paid for with cash yet. Cash. This is considered a current asset. Current assets are any assets that can reasonably be converted to cash within a year. Inventory. This is a current asset account that consists of all raw materials, work in progress, and finished goods that a company has accumulated. Equipment. Part of the property, plant, and equipment or PP&E account. Equipment is a tangible capital asset that is used to generate revenue and profit. Next comes the liabilities. Liabilities are normally made up of accounts payable, short-term borrowings and long-term debt. First, accounts payable. This represents the company's purchases of goods or services on credit. Accounts payable is expected to be paid off within 1 year's time, or a single operating cycle, whichever is longer. Account payable is one of the most liquid forms of current liabilities on the balance sheet. Second, short-term borrowings, considered a current liability. These are financial obligations that are due and payable within a year. Liabilities occur when a company has undergone a transaction that has generated the expectation of a future outflow of cash or another economic resource. A liability doesn't necessarily have to end up resulting in an outflow of value. Third, the long-term debt, also known as limited. This refers to any amount of outstanding debt a company holds that has a maturity of 12 months or longer. It is classified as a non-current liability on the balance sheet. The time to maturity can range anywhere from 12 months to 30 years and beyond depending on the type of debt. It may include bonds, bank loans, mortgages, debentures, etc. Finally, the shareholders' equity. Shareholders' equity is made up of retained earnings and share capital. First, the share capital, also known as contributed capital, equity capital, or shareholders' capital. This is the amount a company's shareholders invest for use in the business. When a company is created, if its only asset is the cash invested by the shareholders, the balance sheet is balanced through share capital, an equity account. This equation shows the relationship between all of these items. Second, the retained earnings. This refers to the portion of the business's profits that aren't distributed to shareholders as dividends. They are reserved for reinvestment back into the business. Typically, these funds are used for working capital and capital expenditures or allotted to pay off debt obligations. Now that we have covered all three elements of accounting equation, let's see an important relationship by rearranging the accounting equation. You can also rearrange the equation like this: equity equals assets minus liabilities. This version of the accounting equation shows the relationship between shareholders' equity and debt. The shareholders' equity is what remains after all liabilities are subtracted. Creditors, or the people who lend money, are the ones who have the first claim to a company's assets. For instance, if a company goes bankrupt, its assets are sold and the funds are used to settle debts first. Only after the debts are settled can the shareholders receive any of the assets in an attempt to recover their investments. For every transaction, both sides of this equation must have an equal net effect. Let's look at some examples of transactions to demonstrate how they affect the accounting equation. Purchasing equipment using cash. Company ABC wants to purchase a $15,000 machine with cash only. This transaction results in a debit to equipment, an increase of $15,000, and a credit to cash, a decrease of $15,000. The result looks like this. As you can see that the overall accounting equation is balanced. A transaction like this affects only the assets of the equation, and there is no corresponding effect in liabilities or shareholder equity on the right side of the equation. Now let's see what will happen by purchasing equipment using cash and credit. ABC wants to purchase a $50,000 machine, but it only has $15,000 cash available in its holdings. The company is therefore allowed to purchase the machine with the initial payment of $15,000, but it owes the vendor the remaining amount. This results in a debit to equipment $50,000, an increase on assets side, a credit to cash with $15,000, a decrease on assets side, and finally, a credit to accounts payable with $35,000, an increase on the liabilities side. The net effect on the accounting equation looks like this. This transaction affects both sides of the accounting equation. Both the left and the right side of the equation increase by $35,000. The expanded accounting equation. The expanded accounting equation gives more detail for the small business owner's equity amount shown in the basic accounting equation. The expanded accounting equation for a sole proprietorship is assets equals liabilities plus owner's capital plus revenue minus expenses minus owner's drawings. In a corporation, the expanded accounting equation provides additional details for the stockholder's equity amount than what is shown in the basic accounting equation. For a corporation, the formula is assets equals liabilities plus paid-in capital plus revenues minus expenses minus dividends minus treasury stock. Using the expanded version of this equation allows you to separately see the impact on equity from net income with respect to increase by revenues and decrease by expenses. You can also see the effect of transactions with owner's drawings, dividends, sale or purchase of ownership interest. Let's take an example. Assume company ABC sold goods for $10,000 cash, that has cost of goods sold of $7,500. How this will affect the extended accounting equation. Let's put all the above information in the extended accounting equation. On the left-hand side, we have increase in cash by $10,000, and at the same time the goods that we have sold had a cost of $7,500, so that is a decrease. So overall we have a net increase of $2,500 on the assets side. On the right-hand side, we have sold goods for $10,000, that is a revenue. At the same time we have to book an expense as cost of goods sold of $7,500 for inventory. The overall net effect on the right-hand side is also $2,500. Hope you have understood the basic and extended accounting equation and how it can be used to assess a company's performance and liquidity. If this video was helpful to you, please give this video a like, and don't forget to subscribe for more lectures. If you have any questions, please ask us in comments. See you in our next lecture. Take care.